What I really like is that this kind of way of living or kind of managing your wealth is now accessible also to regular Bitcoiners, right? Because very few of us are able to kind of hop on multiple real estate projects, having a couple of houses, collateralizing them through mortgages, buy stocks, this and that. So really the approach towards your assets as something that you never sell because it appreciates over time brings a lot of value. The democratization of this, bringing it to all the Bitcoiners out there, I think is super powerful. And ultimately, let's see, Bitcoin might really start competing with real estate as the top asset for, from this particular purpose, right? From the monetary perspective. So yeah, this is a really big shift. And I think with the growth of adoption of Bitcoin, it's gonna just become bigger and bigger.
Hi everyone and welcome back to Stefan Livera Podcast, brought to you by Bold. For American listeners, you can buy and sell Bitcoin over at getbold.io. Now, rejoining me on the show today, joining for the first time is Igor Neumann. He is a co-founder of Firefish, which, as I understand, is one of the relatively new European lending startups. And I've been talking about this a little bit on the show, so thought it would be good to get someone on from the team to explain what's going on here. So first off, welcome to the show, Igor.
Thanks a lot, Stefan. Thanks for having us here.
So, yeah, just give us a quick overview on, I guess, who you guys are, what are you guys doing, and then we can sort of get into more specific questions.
Absolutely. So first and foremost, we're Firefish. As you mentioned, we're a Czech-based startup. So we're based in Czech Republic in European Union. We started our platform or the project roughly 2 years ago or 3 years ago when we also think about the development phase. And basically, what is Firefish? Firefish is an open market for Bitcoin-backed loans, right? So when I say market, we do have two sides of the book, right? So obviously, naturally, you have the borrowers who are your Bitcoiners who never want to sell and they want to use their Bitcoin as the collateral against a loan. And on the other side, you have also lenders or investors, as we call them, who are basically people who are funding these loans, right? So on the platform, you can act as the borrower or also as the investor. Now, we do support fiat currencies like Euro, Swiss franc, and some others, as well as USDC stablecoin. So if you are long liquidity, if you're long fiat, basically, and you want to earn an interesting interest or a yield, basically, on your currencies, you can obviously act as the lender. And what's very important, obviously, we've built the platform in a non-custodial way, right? So we are not centralized lender. We are not centralized custodian. We're literally just a marketplace, actually, that is connecting the borrowers with the lenders. And the important fact, as I mentioned, borrowers have the ability to lock their Bitcoin in a non-custodial way, right? So it's definitely a different security model than centralized lenders or custodians. And also what is important to mention, we are Bitcoin native. So what we've developed, maybe we're going to go through the details a little later, is what we call Firefish protocol, which is basically a script that is taking Bitcoin native components and then, in a particular way puts together a scripting basically code that locks your Bitcoin on chain, right? So that's where your Bitcoin would be locked. So that's where we are at.
Gotcha. Okay, yeah. And as I recall, I think a couple of years ago at BTC Prague, I've seen your booth and stuff around. So definitely I've seen you around from those days. I guess just people who are familiar with the Bitcoin lending market, they may know there's different people out there, right? So in the US, you've got like the Unchained Capitals, although I believe nowadays they don't do individual loans, they do like corporate loans. There's things like Ledin, who I think they started in Canada, but they've now shifted, but they're still out there. There's people might know of HODL, Lend, and Debify. There's Lava. And of course, there are the custodial providers of this, right? Like nowadays, a lot of the companies are doing a custodial version of this. So as I'm understanding what you're saying, or you explain to me where it's different. Is it similar to like a HODL Lend kind of protocol, or is it a bit different? Can you explain a bit there?
In principle, we could say that it's from all what you mentioned, actually, from all the protocols or platforms out there. It could be we could say that it's similar to HODL Lend. So you basically do have two parties, the borrower and the liquidity provider. There are definitely differences in the way the system is set up, or how the the scripting works, how your Bitcoin is actually locked. Because I think the biggest difference, what I would say, and that was from really very first moment when we were thinking about how to develop the platform, is that we really wanted to kind of break as many barriers for the traditional liquidity to join the Bitcoin back ecosystem, right? So basically we've developed the platform in such a way that you as the lender, you do not have to be Bitcoin native, right? So you literally, your only role would be to provide liquidity, so literally sending a bank transfer to your counterparty or USDC, obviously. But you do not have to operate any cryptographic material. You do not have to have an app or store keys, or sign any transactions. So also the very details of the Firefish protocol are different than any other proposition, I would say, out there. As well as from the borrower's perspective as well, you do not have to be online all the time. You do not have to sign transactions. So we are using actually a combination of multi-sigs, pre-signed transactions, and time locks, and that brings, I would say, from the user perspective, a very smooth experience, because literally you as the borrower, initially you just lock your Bitcoin on the platform, and then once you repay the loan, it's automatically either moved back to you, or if you default on the loan, it gets to a liquidator, right? So there are certain similarities in terms of the marketplace nature, I would say, but also there are certain differences, in terms of the participation in the marketplace and the way obviously we are working with your Bitcoin.
Okay, understood. And so, as you're saying, this platform is available not just in Europe, but globally?
Absolutely. We started obviously in Europe. We wanted to gain some traction in the domestic market. As I mentioned, we're from Czech Republic, but the market. I mean, many people say that Prague is actually the capital of Bitcoin, and
right.
You could see it on BTC Prague. It's a very sort of robust and big market. So even domestically, so we actually started with the harder part, which is the fiat loans, and then later we also enhanced the proposition to stable coins. So now actually anyone from around the world can actually join the platform, register, and start interacting. If you're from the European Union, you can interact in fiat. For the time being, for the other countries, you will have to stick to USDC. But we're also, obviously, with time, we're expanding our proposition also into different markets. But yes, the platform is actually available globally.
Gotcha. And so, just to give people an overview before we sort of go further into detail, can you give us an overview? What are the loan terms, like the length of that loan? What is the normal LTV, or at least the allowable LTV ratios? And what are, let's say, the typical interest rates, even though I know it's a market? So let's just start with the loan term. Yeah.
The long term, for the time being, we wanted to kind of normalize the market, right? So we didn't want to have any kind of broken dates and all that. So at this point in time, we support loans from 3 to 18 months. Obviously, there's a very big demand for longer term loans, in particular 4 years, for obvious reasons. So we're going to be expanding the terms as well. So in terms of the terms, is 3 to 18 months. In terms of the amounts, you can borrow basically anything from 800 euros, which is the minimum ticket size, to whatever your user tier allows you to. And in terms of the interest rates, as we're not centralized lenders, as you mentioned, we're not setting the interest rate. So this is also, I would say, a nuance of our platform, where the interest rates are not actually set by the lenders. It's the other way around. So it's the borrowers who come to the platform and submit a request like, hey, I want to borrow 10,000 euros at particular interest rate for a particular term, right? So the interest rates are basically driven by the borrowers, but obviously, as it's a marketplace, there has to be enough demand from the lender side, to hop on your particular request. So, for example, if someone asks for 5%, definitely there won't be enough demand. At this point in time, if I look at the current state of book, USDC, for example, have been dealt at around 8 to 10-11%. Euros, the same thing, depending on the tenor. Obviously, the shorter rate loans are or usually have a lower interest rate, so that would go from around 7 to 12, 13%. Now, there's also one additional thing. We also have a service called instant loan. So, for example, if you're the borrower and you need the money very quickly, you do not have to wait on the marketplace. We already have a pre-committed liquidity, so you can literally just start the process with locking your Bitcoin and the funds would be disbursed to you instantly, basically, right? So that's another option. And in terms of the LTVs, we have a standard LTV of 50%, but it's a good practice. Actually, we've noticed on the platform that, Bitcoiners, obviously, they are fully aware of the volatility of Bitcoin price. So I would say the average LTV is around 40%. So it's always, the Bitcoiners sleep better, obviously, when they have bigger cushion than just 50%.
Excellent. And one other thing you mentioned, the amount. So you said on the low end it's 800 euros. Is there like a maximum, or is it just however much people want to put up?
Yeah, I mean, if you think about it, the marketplace obviously is predominantly driven by retail, right? So I would assume that it would be difficult to find a lender that would that would actually lend to the borrower, let's say $1 million. So normally what we see on the retail marketplace are tickets up to like 50,000 euros or 70,000 euros. But we also do have what I would call like an OTC sort of flow where we are matching bigger tickets, with particular preset counterparty. So in theory, actually, the upside is unlimited. Also, as I mentioned, it depends on your tier, because love it or hate it, we need to do KYC and AML checks. So depending on your user tier, that there's a particular amount of transactions that you can process on the platform.
Yeah, I see. Okay, yeah, so fair enough. And so then talking about the user types, who are the main kinds of users that you have seen on the platform so far?
So initially, I would say predominantly this would be the typical Bitcoin maxis, right? Because as you can imagine, Bitcoin maxis, they do not trust centralized lenders or custodians per se. So there has been really a very, very strong demand from the Bitcoin maxi space, mostly retail. But since we've been gaining traction and, the platform has been, as I mentioned, up and running for a couple of years, we see more and more of additional user types on the platform. So we do already have a number of SMEs on both sides, actually, which is interesting, right? Because if you're an SME and you hold Bitcoin in your treasury, which is pretty common here, actually, in Czech Republic, as I mentioned, there are a lot of Bitcoin lovers. You want to use your assets, not just kind of waiting for the price appreciation, but also, using it as an asset, as a collateral, basically against the loan. So we do have SMEs also on the borrowing side, but as it's an open marketplace, a lot of SMEs as well as obviously retail have been using the platform on the lending side, right? So people basically, if they compare the yields that they earn on, let's say, term deposits in the bank or even treasuries or some securities, the yields on the platform are much higher. So a lot of people are actually withdrawing their funds from either banks or even additional peer-to-peer unsecured platforms and kind of using it on our platform as liquidity providers. And last but not least, obviously we do have a number of high net worth individuals, I would say. So, again, these are kind of tech and finance savvy investors who know, who understand the proposition, who know, where to find the yield or generate alpha, basically. And as I mentioned, really the interest rates, as they have been rather higher than any other alternative in the money market or fixed income space. There's been growing demand from high net worth individuals on the platform as well. But eventually, we're also opening up the platform for institutional borrowers. Naturally, miners, they are the natural borrowers because their revenues are in Bitcoin, whereas they need to kind of fund their operations, by technology and so forth. So that would be the next cohort of basically borrowers.
Interesting. So yeah, as I understand, the typical story is often like Bitcoin maxis who don't want to sell. Fair enough. Many of us have been there, and people who they've got a business case where they can borrow at a certain level from you guys or through your platform, let's say, and they've got somewhere else they can go and deploy that capital into a business, and they can actually earn more than what they're paying. Therefore, make that difference. And then, but it is interesting you point out Czech SMEs even are into this. I'm curious, do you have any? Obviously, not doxing individual ones, but can you spell out a bit about what you're seeing there? I think listeners would like to hear a bit more about that. Like, how prevalent is that? Is that kind of a common way? How are they thinking about this?
Yeah, listen, as I mentioned, I mean, I think the Bitcoin community in Czech Republic is really, really very strong for many, many reasons. And, the guys actually from BTC Prague had a very nice video about it last year, I believe. So, it's not uncommon here in Prague, for example, when you walk around, you go to a restaurant, that you can actually pay with Bitcoin, right? So really the Bitcoin adoption here is at a very high level. You can pay with a QR code, just through your Lightning and stuff like that. So in terms of the adoption, I think that's the foundation of why so many people are into this. And many of the entrepreneurs who are in Bitcoin are trying to leverage Bitcoin either as a payment channel for their businesses. Mm-hmm. So, there's a number of companies that where you can obviously buy, I don't know, electronics or whatever you want, and you can pay with Bitcoin, which is great. So we have actually one of the biggest distributors of something I would call them like Czech Amazon, basically a company that is accepting Bitcoin for as a payment method. But as I mentioned, there is a growing number of SMEs and institutions that are holding Bitcoin on their balance sheet, and now they're discovering, what to do with it. So instead of just kind of receiving Bitcoin as a payment or using it as a payment method, they're now exploring leveraging Bitcoin as a real asset, just like you do with equities, with fixed income instruments and all that. So I would say really the adoption, and I would also love to invite everybody to BTC Prague. We're going to be there as well to learn really more about this, because I think we're in a very, very interesting environment where the whole market is very accepting Bitcoin, I would say, and the traction is just proving that we're doing the right things for this market.
And I'm also curious if you have any, let's say, stories you can share from the lender side of things, right? Because this is kind of the thing where obviously once you're truly a Bitcoin maxi and you believe Bitcoin is going to be the money of the world, you often don't want to give up your upside, right? So then it's like, which people are doing that? Are these people who maybe they already have some Bitcoin as well, but they've got like a small fiat allocation and they think, okay, well, I'll get some fiat yield on that fiat allocation side of it? Or are they people who just haven't gone down the rabbit hole and to them, they don't even know. They just kind of put some fiat in and get some fiat return out. How are they seeing it?
Yeah, definitely. I would say at the very beginning, the vast majority of the lenders were actually native Bitcoiners, right? So because they naturally would understand the proposition, the security proposition in the first place, the fact that these loans are over collateralized, they would understand the risks, related to investing in Bitcoin-backed loans. So at the very, very first point in time, I would say the vast majority of lenders were coming from the Bitcoin space. But as time goes, and also like looking at what's been happening in the markets in the last couple of months and years, like starting with the ETFs, and the sort of overall shift of perception of the global markets on Bitcoin, more and more people from TradFi starting understanding that, hey, actually, this is not a terrorist financing tool anymore. Bitcoin is really a legitimate asset that is widely accepted across the globe. Wall Street is there. The governments are contemplating on accepting Bitcoin or putting Bitcoin on their balance sheets and all that. So more and more people from traditional finance, I would say, are getting into this. And what we've also seen is actually growing interest from traditional finance institutions. And I'm really talking about banks, I'm talking about funds, I'm talking about family offices, right? So really the part of the market that really we wanted to help to, unlock their liquidity and bringing it to Bitcoin-backed loans, because I think from the sort of risk reward perception, Bitcoin-backed loans are extremely, I would say, attractive in terms of, the downside is very, very limited. Obviously, there's nothing like no risk, but the downside is very limited for the lenders, whereas the upside, the yield that they can generate on their free fiat is definitely much higher than any other alternative they actually have access to at this point in time. So really, I think starting from the Bitcoin maxis, going through the shifts in the market in general, we're going to see more and more traditional institutions in this field.
Yeah, really interesting to see how this is growing and developing. And I'm curious as well, I'm sure you got this question 1,000 times, but a lot of people are thinking back to, what happened last cycle with, FTX and BlockFi and Celsius and all this stuff. Of course, I understand the difference. There are some differences here, but can you just explain for people how you're thinking about that? Are we going to see the same thing all happen this cycle, this go around in 2025? What do you think?
I don't want to prophesize, honestly. I mean, it's very difficult to sort of estimate what will happen. I mean, even if you asked us, let's say 2 years ago, like, hey, what do you think? Where's going to be Bitcoin? In 2025, that would be a crazy bet. Maybe like 100K, whatever. Maybe apart from Michael Saylor, people wouldn't expect Bitcoin really to be growing as fast as it was in the last 2 years. In terms of the risks, I mean, one thing that we've noticed, and I've seen a couple of also research papers on this, is that the overall volatility on Bitcoin is decreasing, right? So seeing days of Bitcoin falling 40-50%, I hope these days are gone. But again, that's just my personal guess, and I think it's also thanks to the fact that the market, as I mentioned, is much more matured. The access to Bitcoin is much wider. And, in general, Bitcoin is much more accessible than it was before. And also, as I mentioned, the perception of people has changed. And last but not least, obviously, there's a lot of institutional interest in the market, right? So really seeing the collapses of the previous years, I'm sure there's always a rotten apple in the basket somewhere. So I'm sure there's some of the projects or services might not necessarily survive. But I would be actually very surprised if we see the similar domino effect like we saw with Celsius, BlockFi, Three Arrows, and FTX. So I think the market has already kind of reached a bit more matured state.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 or 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah, I think that's probably right. Nevertheless, I think it's it's fair to say that there'll be blow-ups to come, and those who are more conservative will tend to survive, whereas maybe the more aggressive ones who were too levered or kind of didn't think about the risks correctly, then there is more risk there. So I want to dive into some of the technical aspects a little bit more now. So can you overview a little bit how this is working from a self-custodial perspective? Like, what is the underlying technology here that is being used? Could you just give us an overview of the technicals there?
Absolutely. So when it comes to the Firefish, what we call the Firefish protocol, which is basically a script that is locking your Bitcoin in an escrow address on directly on blockchain. So again, no wrapping, bridging, and all this hocus pocus of the DeFi world. So we really wanted to basically bring something that is Bitcoin native. And literally what we're using in the Firefish protocol are, as I mentioned, multi-sigs. There are pre-signed Bitcoin transactions and time locks, right? So 3 components that are Bitcoin native. We also use a very maybe kind of unusual setup for the multi-sig, which is 3 out of 3 keys, right? So there are 3 keys. 1 key is held by the borrower themselves. And also this particular key is what we call ephemeral, right? So it's a key basically that you use only to pre-sign the transactions. And then obviously you are not signing any more transactions in the future. So the additional 2 keys are held by what we call oracles. So we have a price oracle and a payment oracle. The role of these 2 oracles is literally in terms of the price oracle is just to check Bitcoin price, because obviously there might be a liquidation due to collapse or the LTV basically reaching the liquidation level. So there's an oracle that is actually holding the key that signs the transactions for liquidations. And then there's the payment oracle, because as I mentioned, we are operating also in a fiat world, right? So we need to understand whether a particular fiat transaction happened or not, as we obviously do not have access to the banking data, we need to rely on a third-party source, right? So in current setup, basically the lender would say like, hey, I've sent the money to the borrower. Borrower would say, yes, I've received the money, and the payment oracle would basically then sign the corresponding transaction. Now, so these are the three keys, and then as I mentioned, there are pre-signed Bitcoin transactions. What is important to mention, basically, once you lock your Bitcoin in the escrow on blockchain, it can move from that particular escrow address only in two paths, right? One is back to the borrower once they repay the loan, or to the liquidator in case they do not repay the loan if they default, or if they default due to the price decline, right? So
just quickly, the liquidator in this case, is that Firefish or is that the investor?
So there are two options, actually. There's what we call self-liquidation and Firefish liquidation, because as I mentioned, we also wanted to kind of bring in traditional, or retail, basically fiat retail people who are not necessarily Bitcoin native. So anyone who has, some euros on their bank account or other currency, they can actually start using the platform. Obviously, that's if they opt for the Firefish liquidation, which means that we are going to liquidate, sell the collateral on their behalf. They obviously need to trust us. So that's we definitely would prefer the self-liquidation mode, in which case the lender basically would receive the corresponding amount of collateral in case of the liquidation.
Okay, so. Just help me understand a little bit about the kind of exact setup there with the Firefish protocol. So the multi-sig, the borrower has signed, and then you have the oracle price and the price oracle and payment oracle. So I guess as you spelled out at the start, the lender, the investor, is not touching cryptographic material. They're not touching keys and so on. The borrower, are they doing this out of like a phone app or a hardware wallet, or like where are they operationalizing this?
So we have an app, like a website basically where you can log in. So we're leveraging the native browser technology. So there's a code that is running on your browser where all the calculations are done, and the signing basically happens on that site. So you as the borrower, literally you just go to the platform. Once you are matched with an investor, you go to the process of locking your Bitcoin. So literally the only thing you need to do is to scan the QR code or just copy the address, and then there are the calculations obviously happening on your backend inside of your browser. And once Bitcoin is locked, obviously investor gets the notification and they can send the funds. So that's where actually the whole process for the borrower stops. That you do not have to hold any keys, you don't have to download an additional app or have any additional infrastructure, store seeds and stuff like that. So that's basically the logic. And as I mentioned, once the transactions are pre-signed, there's nothing else, no one else can kind of fiddle with that. Obviously, once Bitcoin is sitting on the escrow address, as I mentioned, and very often people ask, like, what if someone hacks the escrow account? It's impossible, because there are only two paths hard-coded. It's your return address or is the liquidator's address. So, even Firefish cannot actually steal the funds from the escrow. Or even if, some people were asking, what if the police comes and they are like, hey, send us this user's Bitcoin? We can't do that, right? So it's hard-coded, and it's part of the security proposition.
I see. So as part of let's say from the user's perspective, when he goes to sign up on the Firefish website and the protocol, he is sort of saying, okay, just for example's sake, I want to borrow, say, 10,000 euros, and I'm putting up, 20,000 euros worth of Bitcoin on the website. I'm selecting these options, and then I'm saying, here's my return address. That once I've paid back the 10,000 euros in this example, send my Bitcoin back to this address. And so that is the address. That's one of the pathways, and then the other pathway is the Firefish liquidation pathway. And so that's what's being pre-signed there, or what exactly?
Yeah. So let me get exactly to the pre-signed transactions, right? So as you mentioned, yes, once borrower gets to the platform, they go through the process. They do set up their return address. Obviously, they can double check it whether it is theirs, and then also lender, when they're actually accepting one of the deals from the platform, they can opt like, hey, I want to go self-liquidation path. In that case, they're also then gonna use their own address for the liquidation, or in case of Firefish liquidation, they just move on into the the payment process. Now, as I mentioned, we're using also pre-signed transactions. So part of the multi-sig, when the borrower is actually signing the transactions, there are 4 particular transactions that are partially signed by these 3 entities. So the borrower and those 2 oracles. So the first pre-signed transaction or partially signed transaction is a repayment transaction. Repayment transaction is already signed by the borrower and is signed by the price oracle, because the only key or the only signature missing there is the confirmation from the payment oracle that yes, the borrower has repaid their loan, right? So once the borrower repays the loan, the payment oracle adds the missing key, and obviously a Bitcoin is moved back to the borrower. So that's repayment. Then on the opposite side, you have the default situation where borrower doesn't repay their loan, which is happening very, very rarely. Literally, I mean, until now we've processed thousands of deals, and there have been literally only 2 defaults for various reasons. So really, it only proves the fact that Bitcoiners never want to lose their Bitcoin. But basically, the second transaction is the default transaction. And again, this is pre-signed by the borrower. It's pre-signed also by the price oracle, but the signature from the payment oracle is missing. So again, if there's a default, borrower confirms that no, I haven't repaid the loan, and lender as well confirms no, I haven't received the money, then the oracle adds the missing signature, and in that case, again, Bitcoin moves to the liquidator, right? Be it the investor themselves or Firefish as the liquidator.
One question I have at this point is, how do you deal with, let's say, the different prices at this time? So as an example, let's say I enter this loan now at 110,000, and I don't know, let's say it's a bear market and my liquidation price is, I don't know, 55,000, or let's say the price somehow goes down to 45,000 and I get liquidated. Mm-hmm. How exactly, can you explain that part of it, the liquidation price signing part of it? Yeah.
Exactly. So that's actually the third transaction, right? So there are 4 pre-signed transactions. So we had the repayment, we had the default, and the third one is a price liquidation transaction.
Okay.
So in that case, for that we have obviously the price oracle, which is basically an aggregated feed. So we are using external data from various venues that are, we're filtering out obviously some spikes and stuff like that. So you don't want to get liquidated because, I don't know, Binance went down or there was a technical glitch on one particular venue. So we're taking multiple venues and the price feed from those venues, and whenever the price hits your liquidation level, which you know from the very beginning of the loan, in that case basically the price oracle signs the liquidation transaction, right? So in that case, obviously Bitcoin is moved from escrow to the liquidator. So that's the third entity, and in the price liquidation, obviously the price oracle is adding the missing signature.
Yeah. And then what's the fourth one you mentioned?
So the fourth one is something what we call the zombie apocalypse scenario, right? So as you can imagine,
it's like an emergency recovery kind of thing.
Absolutely, yeah. So that's exactly for the case. I imagine that Firefish would disappear, the Oracle infrastructure would disappear. We wouldn't be able to sign any transactions. The last thing we really wanted to happen is that Bitcoin stays locked in the escrow forever, right? So basically, there's a fourth transaction that is actually signed by all 3 entities, so both the borrower and those 2 oracles. But this particular transaction has a time lock on it, right? So that's the third component of the script, and the time lock is actually set for 1 month after the maturity. So if Firefish disappeared, the loan would get matured. The particular transaction becomes valid 1 month after the loan is or has basically expired or has matured. In that case, the borrower can broadcast this transaction and withdraw Bitcoin back to their wallet or to their return address. So that's literally just for the scenario, the zombie apocalypse scenario, if everything goes belly up and Firefish is not collaborating or not able to sign any transactions.
I see. Okay. And so at that point, in the emergency recovery scenario, does the user have to do anything? Like, does he have to broadcast something, or how does that, like, does he get a PSBT, or does he get a valid transaction that he can only broadcast in 19 months, or what?
Exactly. So actually, right on the platform, when you look into your loan details, you can download the recovery transaction. So it's literally like a text file, as you would guess, which you can just copy paste into any mempool and basically broadcast
As in, that's
it
like
into
the transaction
network.
hex, and you could broadcast
Exactly.
that.
Yes.
Right.
That's it. So from the literally from the moment of once you lock your Bitcoin, you can download the transaction. And then broadcast it if the worst case scenario would happen.
Right, and I think sites like blockstream.info has like a thing where you can paste in a transaction hex.
Exactly. It's
some
very
of these
simple.
Different sites have
Yeah, it's literally a matter of copy pasting it into any of these blockchain explorers and broadcasting it.
Yeah. Okay. What about? Okay, here's another one. What about if the fee market really shifts in that time? Like what if we pre-sign at 3 sats per VByte, and then let's say in 19 months' time, or what, it's 100 sats of VByte or whatever,
Yeah, I mean, this has been a tricky one because we've experienced obviously massive spikes on the fees in the past, like with the rooms and with all these kind of crazy projects on Bitcoin. So what we actually do, we as a Firefish, we are bumping those transactions, right? So if there's a repayment, we set the minimum like one set fee at the very beginning, and then we are actually bumping those transactions for you, right? So there's obviously portion of these transactions that is or a portion of the fees that would be covered by the borrower, but in most cases, we are the ones who are actually then bumping the fees for the future, because as you mentioned, I mean, you can never tell like what the fees will be. So this is one of the downsides of being on chain, but obviously we believe that there are many more significant benefits of being on chain than basically fiddling with the fees.
Yeah. And by the way, what's the fee on the Firefish side? Is there like an origination fee, or like what's the fee that you guys get?
Yeah, it's a simple origination fee of 150 basis points, right? So that is paid by the borrower. So that's the portion that would be taken from the collateral. But as it's per annum basically, right? So it's 150 per annum. If you take 1 year loan, it's 150. If you take 3 months only, that's only a fraction of it.
Gotcha. Okay. Yeah. Okay. And then can you explain a bit around dispute resolution? Right. What if you get like a case where the guy says he's paid, but actually the other side, the investor side, is saying, no, I can't see the payment. How does that work?
Yeah, I mean, so this is, I would say, the number one question that we always receive from the users, because I think it's kind of unusual that people are doing, random peer-to-peer transactions, right? So literally you could be sending money to someone in Germany or Portugal. And, so we've created this very, very unique network of borrowers and lenders across Europe. But in terms of this, first and foremost, I must admit that we had maybe one particular resolution where one party would be saying that, hey, I haven't received the money. We're dealing with fiat system, right? So it always can happen that you send the money, it gets blocked either by your bank or by the receiving bank. There's always some AML procedures and all that. So really, depending on the bank, the money can be postponed, or the transaction can be postponed significantly, especially when it comes to like SWIFT transactions. So that's actually one of the reasons why we actually dropped USD for non-US market, because like sending dollars inside of Europe, for example, from let's say Germany to Portugal, it's super expensive. You never know when the money comes. You never know how much money comes and all that. So these are the nuances of the fiat system. But in terms of the resolutions, basically, we do have a resolution procedure basically that kind of follows certain steps. In the first step, we would be just literally waiting for the confirmation on the platform from both sides, from borrower and lender. Then if they, for example, if the lender says, hey, I've sent the money, borrower says, I haven't received the money, then we need to wait for both parties to submit transactions from their bank. Like literally we would ask the lender, like, can you share the statement or the transaction that you actually processed it, and the same we would ask from the borrower. So there are a couple of rounds of when we're trying to confirm with both parties where the payment is. As I mentioned, the payments can get sort of postponed or delayed for a significant portion of time, but they always appear somewhere, right? So it's either returned to the sender's bank, or then it appears appears on the receiver's bank account, basically. So there is a procedure. As I mentioned, touch wood, we haven't experienced too much of the hassles. I would assume that's mostly thanks to the fact that the payments in euros or in all the other currencies inside of Europe are pretty fast, right? So if you disburse money, usually they appear on the bank account of your counterparty within the same day. So, and again, at this point in time, I don't think we've had any real bad actors that would be trying to kind of play with the system and all that. But again, for the borrower, if they claim they haven't received the money, there's still the collateral locked. So it would be difficult for them to kind of end up with both money and collateral. We would really need to get a proof that the money hasn't arrived. But as I mentioned, that hasn't happened yet.
Yeah, gotcha. Yeah. Okay. And then also just curious, how is your technology? Is your technology using like discrete log contracts or not? Like, I guess, as I understand, you're not, but it's like there's elements of similarity with like this kind of DLC style of loan.
Yeah, it is very similar. Actually, in principle, we're doing the same thing, but we're not using DLCs for various reasons. But as I mentioned, literally what we've built is a combination of multi-sigs of the pre-signed or partially signed transactions and the time locks, right? So we felt that also this particular approach would have particular benefits. Oracles in particular, yes, we need to rely on a third party, but again, there are various ways of dealing with this. So I wouldn't even say that there's one particular way that is better than the other. Both approaches, I would say, have its certain benefits. We went this path, and so far, it's been working pretty well for us.
Yeah. And then one other question I had around. So this is unfortunately the reality of today, where there's a lot of banks, people are getting their bank accounts shut down, and all this kind of, and what I have heard, even in like not just in the lending area, but like let's say people doing like BISC and HODL and this kind of thing. Or I think now there's also Vexel, also another Czech kind of peer-to-peer one. There's Peach. Like you hear stories of people getting their bank account shut down because, as an example, or the bank contacts them and says, "Hey, where's this transaction from? What's it about? Show me an invoice. Show me this. Show me that." And obviously none of us like this KYC, AML law, these laws. But how has your experience been maneuvering around that? Have your customers or users had issues on that front?
Very few. I mean, sometimes it happens that, it always depends on your bank, your relationship and your history with the bank, right? So if they see, a lot of smaller transactions and then suddenly they see that, 50K arrived from Portugal, they might raise eyebrows. But it's usually only checking like, okay, where is this money coming from? Do you know anything about it and all that? We actually on the platform, we do provide as you're actually taking a peer-to-peer loan, which is absolutely legitimate kind of financial instrument in a way. We do provide you with a confirmation that you, person A, have taken a loan from person B. Those in that statement, obviously, we do not state the names of those people, but we confirm the bank accounts from where the money came from. So until now, literally, we didn't have any issues with regards to banks stopping peer-to-peer loans, or basically on the receiving end. If you send money to someone, the bank would stop the transaction because they feel that it's illegitimate. So 99.9%, I would say the confirmation from the platform is good enough. In that 0.1% cases, you can actually download, because you do have actually a bilateral contract, legal contract with your counterparty, right? So yes, there's an approach that, hey, let's be all digital, all crypto and all that, but we feel that also from the perspective of being able to bring in more liquidity into Bitcoin-backed loans, more liquidity to cover Bitcoiners' needs, basically, we wanted to also add this kind of legal layer. So that's why you have a bilateral agreement with your counterparty, and that's definitely enough for the bank to accept this.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the ColdCard Mark IV and the new ColdCard Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. This episode is brought to you by Galoy, builders of banking software for the Bitcoin age. After years of risk and uncertainty, Bitcoin and banking are colliding. The regulatory environment is rapidly shifting in favor of Bitcoin and digital assets. Fintechs and crypto-native companies can become chartered banks, and traditional banks and credit unions will launch Bitcoin products. But the legacy core banking software that many financial institutions run on wasn't built for Bitcoin. The Galoy banking infrastructure stack delivers all the key elements of a modern core banking platform with cloud-native infrastructure, event-based architecture, and robust APIs coming together to meet the security, scalability, and reliability needs of banks of the future. Whether you are launching a modern financial institution from the ground up, or you are adding Bitcoin-backed lending or payments to your product offering, talk to the team at Galoy. Visit galoy.io or reach out to the team at biz@galoy.io. Gotcha. Yeah. So I guess in most cases, if your bank asks you questions, you are, I guess the user, the borrower in this case, is showing them, hey, here's the contract that I used to borrow this money. That's where the source of the funds is, etc.
Yes.
And then that's usually, I guess what you're saying is that's usually enough for the bank compliance officer to kind of, okay, tick, fine, here's a document and move on to the next, AML compliance thing.
Absolutely. I mean, the statement is pretty simple. I mean, it confirms that you've taken a bilateral peer-to-peer loan on Firefish. It doesn't obviously mention anything with Bitcoin or crypto because some of the banks until now are still pretty sensitive. Yeah. So literally, it only states that you've taken a peer-to-peer loan. This is the counterparty's bank details. This is the date of the processing, and best regards, Firefish. So that's been really enough until now, I believe.
Yeah, interesting. I'm curious. Okay, one other question on the liquidation. I was looking on your website. I saw there's a 5% premium. Is that on the Firefish liquidation, or can you explain that part?
It's on both actually, right? So if the counterparty either defaults or there's a price liquidation, whoever the liquidator is, either the investor or the lender or Firefish, they keep 5% liquidation premium, obviously, because you need to count also with a little delay of when the collateral moves from the escrow to your wallet, so you can pre-hedge yourself and all that. So it's kind of like a fee for the liquidator for the hassle of liquidating the collateral.
Gotcha.
Or in other words, basically that's a premium for the investor that they've bought Bitcoin cheaper by 5%.
Gotcha. Right. So a little bit of let's say a kicker or an incentive, maybe for the lending side, the investor side of this. Okay.
Yes, exactly.
And then, I guess just kind of zooming out a little more broadly, I'm curious how you see things going in the EU. From a Bitcoin laws perspective, obviously, I presume you're Czech, right? So the Czech government seems very positive on Bitcoin, right? They've put in this new law. I think it's after 3 years of holding, no capital gains tax. The Czech National Bank has been publicly talking about maybe buying Bitcoin. So I guess, do you have any sense of where things are going, at least at the Czech government level or at the EU level on Bitcoin?
Yeah, I mean, first and foremost, I would say really things have dramatically shifted since we started, right? So when we started Firefish, there was still this crypto winter, right, where Bitcoin was 15K and all that. And, people thought that's the end of the crypto and Bitcoin is irrelevant and all that. As I mentioned also, be it the Trump's decisions or the ETFs and all that, the mindset have shifted dramatically. So even at the very beginning when we were talking to particular banks banks or potential liquidity providers here in the market. Everybody was like, no way crypto, no way Bitcoin. But it's been happening recently that some of the institutions are coming to us proactively, like, hey, you guys are doing something with Bitcoin, let's talk, right? So I see there's been a really dramatic shift, and especially the banks and the local banks have been extremely, I would say, conservative in their approach. So even previously, if you was filling the AML form, you would say like, hey, yes, I'm dealing with crypto. They would never open your account, or they would shut down your account if you transferred some money from a crypto exchange. So yes, we do see a very positive shift and sentiment overall towards Bitcoin. As you mentioned, the central bank governor, I'm not sure if he's honestly very honest about his intentions, or was it more like a sort of political statement? But there's been a lot of pressure on the government and the institutions about kind of leveling the playing field for crypto in general, right, and Bitcoin in particular. So we see that things are improving. As you mentioned, there's been this law, like previously you would have to pay like a big tax on once you sell your Bitcoin. Now, obviously, after 3 years of holding it, you do not have to pay the income tax and all that. So really things have been improving. As I mentioned, more and more vendors accept Bitcoin as a payment rail, let's say. And in terms of European Union, obviously, I don't want to talk about MiCA regulation too much, because that's an incredible pain. We obviously have to go through the process, and the requirements are pretty tricky, and I'm a little concerned about whether this will actually help the market or rather kill the entrepreneurial spirit. Like if you asked me, like if I would start the Firefish with MiCA being in place in European Union, I would maybe say that, I don't know, like I would move maybe to a different country or start it from somewhere else. So really, I mean, on one hand, I do understand the regulators, they want to protect retail and investors in general from scams and all these illegal activities. At the same time, these are just very often unnecessarily bureaucratic burdens that do not add absolutely no value in terms of bringing better products to the market, or even protecting basically retail. So I think on one hand, it's good to have some, sort of a level play field where you understand that, crypto is legit. At the same time, I think the path that EU has been going is maybe an overkill in a way, in terms of how much of the bureaucracy is required from the companies involved in this market.
And zooming out on the Bitcoin lending market generally, I think this is something that probably many of us in the industry are seeing, that just in the recent, I mean, I'm curious to hear your view, but from what I've heard, it's like in the last, let's say 6 months, there's been a lot more interest in Bitcoin collateralized loans, lending, and we could arguably say that's both on the borrowing side and on the lending side. So can you explain your experience, right? You started in 2022. Have you seen that same pattern? Like just recently, there's been a big tick up in the interest?
Absolutely. And I really think, as I mentioned, coming back to the ETFs, like, suddenly anyone can actually hold Bitcoin on their pension scheme, right? So suddenly it is a legitimate commodity almost, or an asset. And obviously that brings in all the other use cases around it, right? So I would say, when you come into Bitcoin, obviously the first things you think about is like, the payments, the store of value, obviously. But ultimately Bitcoin is becoming an asset, just like real estate or securities, that is going to be bigger and bigger in terms of the use case of collateralization, right? So especially the bigger institutions, they sense that the market is big enough already to be kind of participating in the basically collateralization space. And as I mentioned, we've also seen a lot of domestic entities starting, thinking about custodying Bitcoin, and then obviously bringing new products into it. And literally, as you mentioned, it's been last 6 months, and we've already seen a lot of products, even here in Czech Republic, actually, particular competitors coming up with the similar sort of models. But I would say most of the TradFi guys who are interested in Bitcoin, they would go the custodian, the centralized lending kind of path, right? So I think we are uniquely positioned that, we are not a custodian, we're not the lender ourselves. So we are like a really retail-driven peer-to-peer marketplace. Ultimately, as I mentioned, we'll be working also with bigger institutions, but there's definitely growing demand from both the borrowing side and the lending side that we've been seeing in the market.
Yeah, interesting to see. Yeah, I think there's just been so much interest this cycle there's a lot of things all happening at once, right? It's not just kind of the fiat TradFi stuff. There's technological things improving in Bitcoin and Lightning Land too. But yeah, this lending thing just seems to have there's been so much more interest in it now. So, yeah, we could see that happen. And I guess I will, of course, remind listeners, please do, of course, you're big boys and big girls, you make your own decisions, but, don't lever over your head, or don't be crazy with your leverage, because cycles can turn, right? Like, we're kind of in this huge bull run now, or it seems like that's what it seems like. But cycles can turn, and what you think can be the time that everyone can think, oh, it's so safe to kind of lever up on things, then that can be the time that people can get wrecked. So just be conservative about it is what I would tell listeners. But to be fair to what you guys are doing and what the market is, if people can borrow, as you said, interest rates something like 8 to 10% ish, and over the longer term, Bitcoin is doing much more than that. If Bitcoin is growing, 40-30% a year, then you can understand that there's a clear case for that. And so we have to be honest about what the trade-offs of that are, and that there's a very clear reason why people are doing this. So we have to be balanced in that way.
Absolutely. One thing that I would perhaps add is, like, if you think about how we always talk about the high net worth individuals, the rich investors, how they live, so they never sell their good assets, right? So that's the whole concept. Like, you stick to your good assets and just borrow against them in an asset fiat, basically, that is collapsing all the time. And what I really like is that this kind of way of living or kind of managing your wealth is now accessible also to regular Bitcoiners, right? Because very few of us are able to kind of hop on multiple real estate projects, having a couple of houses, collateralizing them through mortgages, buy stocks, this and that. So really the approach towards your assets as something that you never sell because it appreciates over time brings a lot of value. The democratization of this, bringing it to all the Bitcoiners out there, I think is super powerful. And ultimately, let's see, Bitcoin might really start competing with real estate as the top asset for, from this particular purpose, right? From the monetary perspective, perspective then. I mean, so yeah, I think this is a really big shift. And I think with the growth of adoption of Bitcoin, it's going to just become bigger and bigger.
Yeah. All right. Well, I think that's a good spot to finish up. Where can people find you online?
Definitely reach out to us through firefish.io. We've got all the links there. So that's the only thing you can or you have to remember, Firefish.io. And you can obviously find us on Twitter, on LinkedIn, on other platforms. But on the website, you'll find all the relevant links. Fantastic.
Well, I guess I'll see you in BTC Prague. And listeners, don't forget, Definitely. I've got code Livera, btcprague.com, code Livera, for people going for that. And Igor, I'm looking forward to catching up with you there.
Definitely. Looking forward. Thanks a lot, Stefan.